Hi traders, welcome to Monetize. I wish you a very happy new year and may 2024 be a profitable year for all of you. This is my first weekly technical analysis video of this year and I will make sure that I will consistently keep up with my content to help my audience. So let's start recording the weekly technical analysis video and the first instrument is GBPJPY. I'll delete all my existing drawings from the chart and I'll start from the monthly time frame. Now based on the monthly time frame, this is the scenario. So we have a high here, then we got a lower high, another lower high, the next lower high, and the latest lower high. Now if you zoom in, you will find that we have lower low formation here along with the continuing bullish divergence. Now this is the lowest point, so the corrective wave starts from this level. First wave up, second wave down, and right now we are in the third wave. So we will apply Fib extension here on the upside waves. So starting from the lowest point, so this is the Fibonacci extension 100% level. So let's mark this zone. So we have crossed 61.8 extension level and we are progressing towards the Fibonacci extension 100% level, that is 202.5. Now if you apply the Fib retracement from this high to the lowest point, then the confluence of retracement 61.8 and Fib extension 100 is coming very close to each other. So here is the retracement of 61.8, that's coming around number 200. So in the longer run, GBPJPY is going towards 200 mark. Right now we are at 183.71. We can also apply a rising channel here, starting from the lowest point, connecting the higher lows and the opposite side. So currently it's above 50% of the rising channel. This is the extension level and the Fib retracement level based on the previous cycle. So long-term target is 200. Now let's move to weekly. Based on the weekly chart, we can apply another rising channel here starting from this level. So if you see, it has already crossed the rising channel on the weekly chart, the first rising channel. So when we have a breakout, we can clone and apply the second rising channel on the top of it. Now here is the current ongoing cycle. First wave up, second wave down, third, and continuing wave fifth to complete the cycle. Now I'm going to apply the Fib retracement on the third wave to the upside. So generally on the third wave, the retracement is 38%, and if the trend is stronger, if it is very strong trend, then you may not find even 38% retracement, and this is the case right now in case of pound JPY. So we can see that the market has not retraced even to the 38% level, and it has crossed above 23 again. So this is a very super strong support. Fibonacci retracement 23.6. In round number, the level is 180.71. So we can mark this level as support. That's it. And let's move down to the daily time frame now. Now, based on the daily time frame, we have lower low formation with containing bullish divergence, and the BOS is already done. So let's apply a horizontal ray and mark this level as the bullish BOS. So this is our daily bullish BOS, and it's already done, so we can use a green color to mark this. Now moving to 4-hourly chart. Based on the 4-hourly chart, we can see that after this higher high formation along with bearish divergence, the bearish BS was done and the bearish cycle is completed at this level along with bullish divergence, and this is a very strong level of resistance. So let's mark this level of resistance. And currently we are on the resistance level. So lower time frame, that is 4-hourly chart, we are sitting at the resistance level, and we can also apply a new rising channel, the 4-hourly channel. This is the lowest point, then we have a higher low like this. Now because the higher time frame, the weekly and the monthly chart is still bullish, and the longer term target is 200, and I will look for buying opportunities only. And based on the 4-hourly chart, we are right now at a very important resistance level, so we can have a pullback, and the pullback should be taken as an opportunity to buy. So we can apply retracement starting from this low to the recent most high, and we can look for buying opportunity somewhere here, that is 50% retracement, and then achieve the bullish target. Moving down to 1-hourly chart, we have bullish divergence on 1-hourly, completed your BOS, and the cycle, the bullish cycle 1-hourly is completed. So we can apply fib retracement from the lowest to the recent most high, wait for the retracement and look for buying opportunity. So for only in the short term, you can go for the sell trade, but that will be an aggressive approach. It's better to go for the bullish side rather than the short-term bearish one. So this is the scenario. So if you get an opportunity in the coming week for the retracement towards 182 or 181.5, look for buying and aim for the target around 50% of this downward cycle. So counting from the highest level to the lowest, I'll be looking for this zone as my potential target area for the short-term buy trade. So I'll be looking for entering into buy around this area, 50 to 61. So this is your target, and this could be your SL1 and this could be your SL2. So let's see the risk and reward in this trade. Potential buying around 55, target around 61 to 7, stop loss around 80% or slightly lower than 80%, then you'll get the risk in reward of 2.6. So this is the plan for GBPJPY. I'm looking for buy setups only, not for the sell side. Now the second currency pair I'm going to take is Pound Aussie. Going by the higher time frame, that is monthly. Right now we are sitting inside a triangular formation. So here we have the lowest visible point, the rising trend line. So we have high, lower high, and lower high. We have a low, higher low, and higher low. So from downside, it's creating higher lows, and from the upside, it's creating lower highs. So we have a triangular formation here. So currently, we are on the verge of the breakout, and this is the setup. So counting from this lowest point to the recent most high, let's apply Fib retracement. So we are right now in between 23% to 38% mark, and we can see some slowdown coming on MACD. So currently at the diagonal resistance level, and the slowdown is visible on MACD histogram. Moving down to weekly. Now based on weekly, if I go with my wave count, this is the first wave up, corrective wave down, then your third wave, impulsive wave, and this is your fourth wave, and the fourth wave is making hidden bullish divergence, so which means continuation to the upside. We can remove the Fib retracement right now, and we can go to the line chart. So here we have high and higher high. So I do not see divergence between MACD lines, but we got divergence on MACD histogram, which has given the short-term pullback, and we can look for the continuation to the upside. Coming down to daily now. Now weekly got hidden bullish, and the daily has regular bullish divergence. So we have low, lower low, along with bullish divergence, so which is creating the bullish pressure now. I can apply a falling channel here. And currently we are still inside the falling channel. So a clear breakout from outside this falling channel to the upside will be an opportunity to go for the long. Moving to 4-hourly chart. Now based on 4-hourly chart, we have high, lower high, then we have lower highs, lower high, lower high, lower high. And right now the lower high is broken. We have a new higher high only on the 4-hourly chart, along with bullish divergence. So this is the latest lower low formation along with bullish divergence. The 4-hourly chart is now technically bullish because we have broken the lower high along with bullish divergence, so it has gone to the upside. So we can mark the continuing divergence here. It's a regular divergence, and then we have a continuing divergence on MACD lines. So based on this regular divergence, the BOS is not yet done. This is the 4-hourly bullish BOS level, which is not yet achieved. H4 bullish BOS not yet done. So let's mark it in red. Moving to 1H. On the hourly time frame, I can see triple bottom along with bullish divergence, and we have got the breakup structure. So right now we are at an important resistance level, so we can see a short-term pullback. I can see some divergence here, so short-term pullback and then continuation to the upside. And longer term scenario also looks bullish. If we get a break outside this falling channel, it will be a confirmation to go for the long term bar. So short term, I can see the bullish plan. So based on 15 minutes, only on 15 minutes, we can see divergence, bearish divergence, which means the buyers are exhausted now. They need some pullback and then continuation to the upside. So the plan is in the upcoming week, I'll be looking for buying opportunity only in pound Aussie. The next currency pair is USDCAD. So right now we are on the monthly time frame, and the pattern here is we are stuck in a sideways channel. Let's go and mark the low. This is your higher low, slightly higher, but it's a higher low. Then we have higher lows and higher lows. So this was the false breakout, and I can see a channel, a sideways channel here, connecting the highs and the lows. So currently in the sideways channel, we got the support exactly on the halfway of the sideways channel. And let's mark weekly here. Let's understand the price pattern on the weekly chart. So on the weekly chart, we have a low, higher low, higher low, higher low, higher low. Then we have higher low broken, and we have high, higher high, higher high, and higher high. So the pattern here is we are getting a bullish bounce inside the sideways consolidation. So it definitely makes sense to buy from the bottom of this consolidation, the sideways consolidation. And let's move down to daily. So here we got bullish divergence, formation of higher highs, and then the formation of lower highs. So right now it has bounced exactly from the halfway mark of the weekly sideways channel. Now if you go by the pattern here on the daily time frame, we have high, lower high, lower high. We have lows, lower lows, and lower lows. If you compare the last two lows, they have formed the lower low formation. Even on the MACD lines, we have lower low formation, and the histogram has also formed a lower low formation. So there is no bullish divergence, which means this push to the upside is corrective. It is not a trend change. So the market can go back. So we can count the pullback. We can check the retracement levels starting from this high to the recent low, and you can expect the pullback to the golden zone or slightly higher. So we can have the pullback between 61.8 to 80% zone. So this is the potential target zone to the upside. Now let's mark 4H. So what's happening on the 4-hourly chart? On the 4-hourly chart, here we have a falling channel, and because the price has broken to the downside, so we can clone and apply the second falling channel. It has bounced back from slightly lower than the midpoint halfway mark of the second channel, and the potential target could be the midpoint of the first falling channel. Moving to 1H. On 1 hourly time frame, we have bullish divergence. This is the BS level, which is not yet done, but the market has created equal bottom along with higher lows. Now it is creating a sideways consolidation, and we can expect continuation to at least the 50% mark, or this box, the blue box, which is basically the fib retracement on the higher time frame. So only in the short term I'm looking for the buy setup, and the potential target is between 134 to 135. This is an important level here, so which is coming at 1.35. Expect continuation to the downside from this area. So short-term plan in the upcoming week is to buy. And the next instrument is gold. Now this is the weekly chart, and I'm drawing the rising channel here based on the price pattern. So this is the low, higher low, higher low, higher low, higher low, which was broken once, and then we got new higher lows. I'm going to use these higher lows to apply the rising channel, starting from the lowest point, connecting with the next higher low here. And the second channel can be applied from this low here. So currently we are exactly at the halfway mark of the second rising channel. So we are getting some resistance at the halfway mark of the second rising channel based on the weekly time frame. So you can see this diagonal line, the dotted diagonal line, that is a 50% mark of the second rising channel, is creating a lot of resistance right now, and I can see the slowdown on MACD histogram. Although the lines, they are still bullish, but I can see some slowdown, weakness on histogram only. Moving to daily. Now on the daily time frame, we have high, higher high, almost equal high coming with bearish divergence. So higher high formation with bearish divergence on histogram, even on MACD lines. Then we have almost equal high formation with second bearish divergence, which is creating bearish pressure right now. So if you see, based on the candles, we have a high and now we have a lower high. So we have a triangular formation again. So going back to the line chart, let's use candles or bar chart here. So let's use candle chart. So we can join the highs and we can join the lows. So right now we are inside this triangle. Moving on to 4H. So again we have lower low formation with continuing bullish divergence, which means short-term pressure to the upside. And if you want, we can mark the support and resistance on the daily as well. Low, higher low, higher low, high, previous high. So right now the pattern on hourly chart is bearish. We have high, lower high, lower high. Now we have a low and we have a change of character here. So only short term pullback to the upside. So I can use my previous lower high and the latest low and we can check the retracement levels. So here we have bearish cycle coming to an end with bullish divergence. So I can expect from this high to the end of this cycle, I can mark a new Fib retracement. And interestingly, the 61.8 to 80% mark is coming again in this zone, the highlighted zone. So we can expect in the short term that gold can reach 2069 to 2075 or maybe 2065. So this is a short term bullish target, and then we can expect some more correction to the downside. And then in the longer run, I'm again bullish because fundamentally in 2024, I believe that US Federal Reserve is going to decrease the rate of interest, which is a bullish scenario for gold. So which will bring the bullish conditions in the market for gold. So only in the short term, gold can be corrective. Very short term, we can expect a pullback towards 2065 to 2025, and then continuation to the downside, and then again switching to the bullish scenario for the longer run. So this is the technical analysis video for the first week of 2024. I hope it will add some value to your trading. So if you still have any doubts, you can get back to me. Thanks and take care. Goodbye.